We're always going to recommend bonds as a portfolio diversification tool, but it's very important to make sure that you're allocated in the correct maturity range. That's because long-term bonds are very sensitive to interest rate risk. And what we did see in the first half of this year is there is volatility around the demand for treasuries. And whether we have auctions that go poorly, this impacts not only long-term interest rates, but it then turns around and impacts the global equity markets as well. We still think there's upside for the long-term interest rates because we have a significantly higher trade deficit as we move forward. This needs to be funded, and we think that the supply of treasuries will continue to outstrip the demand. We've seen demand start to wane here, whether it's the Fed buying less treasuries or some of our developed market counterparts and China as well. They're starting to not buy as many treasuries. They're not selling, so we're not worried about this mass exodus from the treasury market like some people may be worried about, but they're buying less. And if you're buying less in an environment with higher supply, that puts upside pressure on interest rates and downward pressure on prices. So if you want to be less sensitive to that, stay in that intermediate to medium term range of interest rate exposure. The one area of fixed income that looks cheap relative to not only equities, but also cheap in comparison to history is municipals. And when you look at this chart, you can see that the municipals yield is significantly higher than an equity yield. And you would expect to see that, but when you take into consideration the tax-free advantage that you get from municipals, this is a good opportunity to make sure you have exposure in municipals. They've been dragged lower really over the past year from a lot of different factors, whether it's a lot of supply coming in the market to get ahead of maybe potential tax changes, but you've seen that basically municipals, there just has not been a lot of yield, and the demand for municipals has been weak. We think that presents a good opportunity for investors that have a long-term time horizon.